welcome. You're watching Market Edge on ET Now. I am Snehisha. With me on the show is Harsh Saita, and today's a special edition of the show because not only will be giving you an entire lowdown of the week gone by, but more importantly, we'll be focusing on the week to come in terms of the cues that you should be watching out for and keeping on your radar. And more importantly, we've got a very special guest who will be joining us on the fundamentals and help us decode the kind of momentum that we're seeing in the markets and the themes that you should be watching out for in the near to medium term. So before we get to that, let's take a look at some of the top headlines that have shaped the week of trade gone by. And geopolitical relief spurred rally on Dalal Street, with the Nifty closing over 1.5% higher for the week. Realty and energy are the top gainers for the week, while IT was the biggest laggard.
A major political breakthrough this week as the US and Iran signed an interim peace agreement. The Strait of Hormuz has reopened, sanctions relief are being rolled out, and negotiations on Iran's nuclear program will continue over the next 60 days.
Commodity markets cooled sharply this week as easing geopolitical tensions reduced safe haven demand and supply concerns. Brent fell around 9% for the week as the Strait of Hormuz reopened. Gold also lost momentum, declining about 4% and slipping to its lowest level of the week on Friday.
In his first policy meeting as Fed chair, Kevin Warsh delivered a hawkish hold, keeping rates unchanged while signaling a tougher stance on inflation. Policymakers removed language supporting future rate cuts, raised their rate projections, and indicated the possibility of at least one rate hike this year.
Indian IT stocks came under sharp pressure on Friday after Accenture narrowed its full-year revenue growth outlook to 3 to 4%, with consulting growth remaining muted. Investors also remain concerned that AI-led transformation projects are yet to translate into meaningful revenue acceleration.
NSE formally filed its draft IPO papers, setting the stage for one of the country's biggest ever public offerings. The proposed issue, estimated at 25 to 30,000 crore, will be a pure offer for sale, with existing shareholders diluting about 6% stake.
Mukesh Ambani struck an optimistic tone at the Reliance AGM. The biggest announcement came from Jio Platforms, whose board is filing its IPO papers with the SEBI. Ambani also positioned Jio at the center of India's AI revolution, highlighting partnerships with Google, Meta, and Nvidia.
Hello and welcome. When you're looking at the market this week that we've concluded, we've seen a very decent market. While today was a bit of a tough day, we held the 24K mark, which was the positive. But for the week gone by, as you can see on your screen, the Nifty is up 1.7%. And this is despite IT stocks falling in trade today, 3.5% in terms of the fall today on the Nifty IT index. And for the week gone by as well, the index has been down around 1.3% as you can see on your screen, 1,000-point cut in trade today. Some of the IT heavyweights is where the pressure was. In fact, Infy was one of the key losers on the Nifty IT index. Let's pull up the Infosys chart. Today, the stock was down, of course, but even outside of that, we've seen a substantial fall on the stock price. For the week gone by, 5.5% lower. For the day gone by, 6.5% lower in trade. So you've seen some bit of pressure coming in on the likes of an Infosys, but all other IT stocks, in fact, TCS, Wipro, Tech Mahindra, we saw some decent gains from the lows today. But outside of that, for the week gone by, it's been quiet pressure building up across the IT index. We'll talk about that a little bit. You also saw some good cues coming in from outside the IT pack. For example, consumption is one sector which has done decently well for itself. You also saw some decent gains within the pharma and healthcare basket in trade today in particular. You saw Trent as one of the top performers on the Nifty 50 index for the week gone by. A nice 16 to 17% gain on Trent is what we've seen. But outside of that, pharma, which has had a tough week, has had a decent outing for the day gone by. Trent, if we can pull that one up, that'll give us a bit of perspective as well. But broader markets were remarkably resilient through the week gone by, right, Snehi? 3% high on both the Nifty mid-cap and small-cap indices.
Absolutely. And in fact, for the Nifty mid-cap and the small-cap index, they've advanced for their second week, so that at least positive, a little bit of that momentum that we're seeing of positivity for both the Nifty mid-cap and small-cap, that continues to advance, so that has done well. And a bunch of sectors like Harsh was mentioning, FMCG second week of gains, you've got auto second week of gains, similar is the case for pharma, but IT, like Harsh was mentioning, under massive pressure. So yes, that has largely been the construct of the market, and going ahead into next week, we'll be watching out for what the reaction is on IT. If this profit taking seen on Friday due to Accenture's guidance being trimmed, if that was a one-off event, or does that weakness once again sustain for the Nifty IT index, is something that we're going to watch out for, along with whether the strength in real estate, FMCG, pharma, metals, whether all of that translates into next week as well. But while that's everything to watch out for on the market front, let's also bring on board Meryl, who's joining us with a list of all okay, we've got some breaking news coming in. Let's put a pause on the cues to watch out for. Jio Platforms has filed its DRHP. That is the breaking news that we're getting this hour, and it's about 27 crore shares of fresh issue. The Jio Platforms DRHP includes only fresh issue. That is the breaking that we're getting, and that is in fact something that Mr. Ambani had announced at the very beginning of the AGM as well. So they had said that later in the day, they will be filing their papers with the SEBI, and that has just happened. And yes, it's a pure a fresh issue IPO coming in for Jio Platforms. We'll be bringing you more details on that as and when we have them. But in the meanwhile, let's bring on board Meryl to take you through a list of all the events to watch out for globally as well as back home for next week's trading session. Meryl.
Yes, let's quickly take a look at what the next week has in store for us. Starting first with Indian data points to track, we've only got the manufacturing PMI in focus. But in terms of global cues to watch, we've got from the US PCE price index, GDP, as well as the advanced economic indicators in focus. UK brings us the manufacturing PMI, while ECB's CPI expectations will remain in focus from the Eurozone. We're also going to be watching out for loan prime rates from China, as well as the Tokyo CPI, which will be in the spotlight coming in from Japan. In terms of global earnings, we're going to be watching out for FedEx set to report its results. And we've got a whole host of names in focus back home in the primary markets as well. Especially watch out for Turtle Mint Fintech Solutions, Waterway Leisure Tourism, Advait Jewels, as well as CSM Tech. All of these names are going to be in focus in the upcoming week as their IPOs open or close in the upcoming week as well. In terms of other global events to track, we've also got a whole host of counters to watch. Especially watch out for the summer Davos is expected to be held in China, which will be running through from the 23rd of June to the 25th. We're also going to be watching out for Jane Street and SEBI, as well as the Security Appellate Tribunal's hearing, which is going to be held over alleged market manipulation. That's going to be quite an important one to track. And the most important counter in terms of global events to track will be the MSCI's annual market classification review. Especially investors are going to be watching out for whether South Korea is going to be added to the watch list for developed market status, and whether Indonesia faces a potential downgrade. So yes, these are all of the events that investors should track in the upcoming week.
Well, along with it will be this huge IPO which will be coming through, which is Jio Platforms. There's also another huge IPO, which is NSE, and both of these will likely suck plenty of liquidity from the market, which is something that you want to keep your eye glued out on as well. This is a completely fresh issue, by the way, is what we're told on the Jio Platforms DRHP, which has been filed. It's a completely fresh issue, and it's something that we will obviously have to monitor very, very closely. 27 crore shares will be issued. I wonder where the capex will be because it's a large one, very, very likely. In terms of how much the fundraise will likely be, it's expected to be around a 27,500 crore fundraise, which Reliance Jio Infocom will undertake. Jio is pitching itself currently as a technology platform, not just a telecom company. That's something you want to kind of keep in mind. Obviously, it has market leadership and it currently caters to approximately 60% of India's wireless data, which runs through the Jio network, has around 1.4 times the 4G and 5G subscribers of the second largest player. is what the claim has been as part of the DRHP. Financials obviously is something we will look for. Around 52% EBITDA margin is what the company has clocked for FY26. And home broadband and satellite, those are the next growth vectors which the DRHP talks about. Jio already has approximately 2.7 crore fixed broadband customers, which is approximately a 68% market share of fixed broadband customers for FY26. But obviously there is plenty of more levers in terms of growth, which obviously what they've stated is going to come from home broadband and satellite going forward as well. Something to keep in mind, of course, and keep track of going forward will be that Jio IPO. 27,500 crores. It's going to be a big one, along with NSE. Those two are going to suck plenty of liquidity from the markets. But listen in to what the chairman and managing director of Reliance Industries Limited, Mukesh Ambani, said at the company's 49th AGM.
Board of Jio Platforms has approved the draft red herring prospectus earlier today, and it will be filed with SEBI today. This is a deeply emotional moment for me, for the entire Reliance family, and for millions of its shareholders. Isha, Akash, and Anant are heading the Jio IPO process and will lead the next generation of value creation opportunities in the future. The proposed listing of Jio will demonstrate to the world that India can build technology companies of global scale, global capability, and global value. I assure you and all prospective new investors that a brighter future awaits Jio.
So that's the take with regard to Reliance. But let me bring on board Pratik Agrawal, Managing Director and CEO at Motilal Oswal AMC, joining us this afternoon to contextualize the market. But Pratik, essentially the big headline for today is the fact that for the week gone by, is the fact that you have the NSE IPO coming in and you've got the Reliance Jio IPO coming in. How should an investor now look at the market construct, given both of these very large IPOs will suck out plenty of money from the market? A bit of a concern, or you believe that there is fresh liquidity looking to invest into these IPOs?
Look, I would not say IPOs, but there is a lot of money on the sidelines. If we go through how investors have invested into, let's say, mutual funds as a vehicle, the peak inflows happened for 5 months successive from September to Jan-Feb of September 24 to Jan-Feb of 25. And then after that, in spite of 1.5 years gone, 2 wage increases for employees, GDP growth related uptake for revenues and profits for businesses. Yet the inflow levels have tended to be actually lower than what you saw at that point in time, which gives you a sense that there is a lot of money on the sidelines waiting for good paper to come in. And IPOs are a nice way of getting into the market. So that is the thought. If the IPOs are good, and by good meaning, they list and provide sustained gains to the investors, I think that sets in motion a virtuous cycle. Other people who are on the sidelines, also start to look at the market and come in. But here, the important thing is that the investors who come in the IPO should make money. If they don't, then the virtuous effect does not take place or gets broken. Now, the other thing is, we have been saying it is time for alpha meaning higher returns versus the large cap index. Now, the reason for that is, if you just hold the thought that markets follow earnings growth, this is a period where the broader market is delivering better earnings growth versus the narrower indices. Okay, that doesn't change. Now, in that kind of a context, if we get 2 large NFOs who from, let's say, the fund fraternity, pull money more from larger cap funds versus the mid and small, these are both larger cap names, it would mean some amount of selling pressure in that part of the market versus the rest. So last year was a year where you had a very strong pipeline of smaller companies which sucked liquidities between September, December of last year. And when that happens, the mid and small cap part of the market took rest. This year around, while the number of issues are fewer, the amount of fund being raised per issue is very large, and they happen to be in the larger cap space. So while it is a more liquid space, yet in a scenario where FPIs continue to be sellers in that space, this is going to be a further dampener.
Right. Mr. Agrawal, I also wanted to get your sense on how you're looking at the markets right now in terms of valuations. We've seen a lot of resilience coming in from the broader end of the market. Do you believe that will sustain? And how are you looking at large caps in terms of valuations, and what's looking more attractive?
So let me tell you, this is a rare time in the market where frankly you don't have worries. And valuations are good. Okay, larger caps are below long period averages, mid caps bumped off long period averages last month, so they're slightly over long period averages and so on. So valuations are on your side, and stuff like India deal with the US not happening, rupee depreciation, oil price shock, etc. are all behind. In fact, even the AI related sell-off, given where valuations are in the IT space, impacts are significantly lower than what it did, let's say, in a month of Feb. So valuations are on your side. Worries are behind. Yes, there is this extra worry of less rainfall that is there. But if we just keep holding the fact that market follows earnings growth, lower rainfall, at least over the next quarter or two, may mean better industrial output, better GDP, because good rains, while they are happening, bring down GDP growth. Lesser power consumption, you have lesser mining, you have lesser construction. That brings down GDP growth. So this year, over the next 2 quarters, if rains are actually as bad as they are made out to be, it could be better. And so markets have 2 quarters of good numbers to look forward to before, let's say, bad monsoon related stresses come to fore.
What should the asset allocation strategy be, or how should the equity portfolio, before I come to asset as a whole, how should the equity portfolio allocation strategy be at this point, Pratik? What's looking good from a sectoral standpoint? What's looking rewarding from a risk-reward standpoint? How's it looking? Give us a sense.
No, so, okay, let me say, this is a period where we are seeing change. This is a period of disruption, right? And disruption hurts larger companies more than smaller companies. The index has some of the largest companies, so disruption hurts them more. Even if they try to pivot, the one part is getting disrupted and you're building the other part. The net is low. Overall outcomes don't deliver strong growth, and hence this is a part which may remain in stress for a longish period of time. Now, versus that, businesses which may have started some time back, 5-10 years back, are positioned nicely for the present. So it could be, for example, renewables. So what's the big theme? Summers are going to be hot, so you need renewables are the quickest, more power. And people commented against solar, but solar does well during sunshine, and given the heat, you need more of it. It can be very quickly put up. But yes, when you do solar and wind, you require BESS, so that's the third element. Okay, you don't want foreign oil. You just saw what dependency there can do to you. So you want to electrify. So EVs become the next theme at the same time today because of AI, etc. You are looking at very strong boom globally in data centers. Our country extended 15 years of tax-free holiday for this space, and many of the hyperscalers are coming to the country to put them up, and which then means that a lot of the guys in India who supply material to data center, that could be normal cables, electrical cables, fiber optic cables, switches, switch gears, cooling equipment, etc., etc. So would all get into a lot of flavor. Now, one more space. If really markets have seen its worst and is going to look better going forward, valuations have corrected. Rest of the world is celebrating. We are not. Outlook is pretty good. So
Okay.
if that into being, capital marketplace could also do very well.
Okay, so those are some of the themes you're liking at this moment, Mr. Agrawal. I'll just request you to stay on with us. We need to slip into a very short break. But viewers, on the other side, we're going to keep this conversation going with Mr. Pratik Agrawal. So stay tuned and we'll be right back. Back with Market Edge, and before the break, we were in conversation with Mr. Pratik Agrawal, the MD and CEO of Motilal Oswal AMC. So let's continue that conversation. Mr. Agrawal, thank you so much for waiting by. I wanted to get your sense on how much do you think the market has already factored in the possibility of a weak monsoon and the fact that we're looking at an El Nino here, because after seeing an initial impact on FMCG, that basket has been quite resilient, as has been the case with autos. How bad can it actually get?
Will tell in terms of the severity of the bad monsoon. But like I said, it's of some narrow spaces, related to agri. For a lot of other spaces, delayed rainfalls may just mean, more production, more growth on a YOY basis. Road construction will continue for longer, for example. Housing construction will continue for longer. Mining will be better. Cement production will be better, and so on. So unless the availability of water is so bad that you can't construct, except that kind of a situation, a lot of sectors actually can report very good numbers over the next 2 quarters. The sectors which get impacted by lower monsoon are agri-related. We are not talking a disaster of a monsoon. We are talking lower monsoon. Stuff like fertilizers, etc., may get impacted. But in terms of the market, these are sectors with very less relevance.
IT, that one has relevance for the market, and that one has had a painful experience, at least in trade today. Has it bottomed, Pratik? What's the view there?
No, so we are growth managers. If you see our constructs across mutual funds and alternates that we run in the house, you would find us to be absent from large cap IT for over 2 years now. Except of course our large cap fund, where we are in the mid cap and smaller cap IT. We think, like I said before, any disruption impacts the larger guys way more than the mid and small. So if you are a capable mid or a capable small, you stand a much better chance. That said, we think now valuations are good across the board, be it large, mid, or small. Lastly, our eyes, the eyes of an Indian manager is different from eyes of a global manager. Global manager will compete an Indian IT services name with what is available globally, and may find that our guys are valued more expensive versus global guys, and they will look in dollar terms, the numbers, and in dollar terms, the numbers won't look good. But for us, Indian managers, we will look at rupee numbers, and given the rupee depreciation, IT numbers in terms of growth will look very good in 26, 27 at least. So I think there is a lot in the price, large, mid, and small. That said, we are growth investors for that reason. Given the low growth in earnings in large, we have not been there. We are just there in the mid and small spaces, mostly mid.
Pratik, last very quick question. I need to close this now. Most expensive pocket today, according to you, and one sector that investors are completely ignoring. Give us your take.
No, so one sector which is very expensive, my take always has been consumers. FMCG, it's always been super expensive. Second sector which is getting disrupted and the numbers don't showcase it is ICE autos. If you do a survey, most people will say that the next vehicle may be EV. If that's the case, then how does this company enjoy a 25 to a 30 multiple? So those are the two spaces, at least we think, are very expensive. People are not acknowledging the dangers. Something similar happened in media when, there was cable and there was OTT, and people said we are present in both the places, but consumer was one. So at some point in time, cable started to drop off. Now, one space which investors are not really appreciative of, I think, is renewables. We think there is a very strong growth trajectory going forward. Our funds have a very nice representation of all of them. In that space, we are with the leaders. Point is, what the street is missing, what the street is focused on is overcapacity in segments like modules, but is missing out the fact that the slant of policy is to integration, modules plus cell, and then module plus wafer, and then plus ingot, and then
Right.
polysilicon. So I think that is
Understood.
what missed.
Okay, Mr. Agrawal, thank you so much for joining us and good to be chatting with you today. And thank you so much for sharing your outlook as well. For viewers, up next, an